everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. Just keep in mind as we get started, as always, that there's risk involved with each trade that you take. The other side of that is obviously there's potential for profit with each trade, but you want to manage risk in a way that makes sense for you. And as we go through the WebTrader platform in the session, you'll see some tools that really assist in that regard with knowing what your potential risk is, potential profits, etc. So there are some nice tools to assist you with that part of things. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, real quick from our main website, in order to get into our WebTrader, which allows you to trade on your MT4 and MT5 accounts, you just log in here in the upper right corner on our main website. You also could trade on both account types from our mobile app, which is found in the major app stores, and also here on our website. There are links to the major app stores to have all of the same functionalities that we're about to use in our WebTrader, but they're available on our app as well. So if we log in here in the upper right, this is the WebTrader platform, and it has tools that can assist you both with technical analysis and fundamental analysis. This is a fundamental analysis session, so we'll focus more largely on the fundamental side of things, but we will also encounter some of the tools and information along the way for technical analysis as well. Now, what we see first, if we go to something like the economic calendar, are scheduled types of fundamental news. You know, there are different types of fundamental news. Some of it's scheduled. We know it's coming. We know what country the information's coming from. We know what the information will be about it and the exact time that it's coming, etc. And so the other type of fundamental news we'll look at, it would be like headlines that are coming out literally by the minute. And our Market Buzz allows us to look at that type of information that's found online just to keep up with what are the latest headlines. And that type of news obviously isn't scheduled. So you just have to check and see what are the latest headlines maybe before you start trading to take into account which way the wind might be blowing, so to speak, on particular instruments based on what's the latest news. Now, with this economic calendar, there are specific trading strategies that we can do that are surrounding this information. And so if we go to today's announcements, for example, and actually let's go back to yesterday's because I want to show you some important information that came in. This was really big news out of the US in particular, this inflation rate data that came in. And what you'll see is it came in pretty much across the board on all of these announcements, worse than expected. And by worse than expected, I mean lower than expected, which a lot of the market actually viewed as positive news because the inflation rate dropped more than expected. And so if we look at year over year inflation yesterday, it was expected to stay flat at 3.4. It came in below that at 3.3. You might not think that's a big deal, 3.3 instead of 3.4. But it actually is to see that inflation is not just staying flat or rising, but actually creeping down. The goal of the U.S. in raising interest rates the past, go back year and a half, they had over 10 interest rate increases was to try and bring down inflation, which had gotten to 8%, 9%, 10% inflation. And now we're down under 4% and trying to get it down closer to 2%, I think is their target in the US. And so the market cheered yesterday that this data came in worse than expected or lower than expected, showing a larger slowdown in the economy than expected because if this inflation rate slows down enough, then interest rates maybe can be brought back down, which will help the housing market. The home loans are more expensive with high interest rates. Same with the auto industry. It's easier to get a car loan and buy a car if the interest rates are lower. Business loans as well. So the market actually is happy if these numbers show the economy slowing down more than expected, because then they expect, well, it's more likely that interest rates could come down sooner rather than later. And so if you saw the market go flying up, the NASDAQ hit all-time highs again. I think the S&P 500 as well. A number of different individual stocks had great days. It was largely because of this data showing the year-over-year inflation rate lower than expected. The month-over-month inflation rate came in lower than expected and actually showed zero growth. Instead of the expected 0.1, it dropped from 0.3 to 0. Boy, imagine if that would have come in as a negative instead of just 0. You might have even saw more of a rise on the markets. So paired with all of this data coming in lower than expected, month over month as well, not just year over year, came in lower than expected on the inflation rate data. So then later in the day was the federal interest rate decision. And while they did not lower the interest rate, it wasn't expected that they would. They did talk about the fact that they do expect the possibility of at least one rate decrease this year, which some were factoring that out, and some were hoping for more than one. But the news was seen more positive than negative. The discussion during the press conference yesterday was that the interest rate may be able to be lowered at least 25 basis points before the end of the year. No guarantee, it's data dependent, but if data like this keeps coming in, showing continued slowdown, then we could likely see an interest rate decrease in the US in the coming months. And so that's kind of the backdrop going into today, understanding why was there so much optimism and rising on the equities and the indices yesterday and a weakening of the US dollar. Okay, and that would be your answer then from a fundamental perspective. Now coming into today, guess what? More data out of the US. And the focus isn't just on the US. We see data out of other countries coming in slower than expected as well. Industrial production, lower than expected, different numbers coming in, wholesale prices lower than expected. We see that out of the European Union countries as well, okay, and the UK. So this would just add to it even more, the US being the largest economy in the world. I know China's trying to stake that claim, but still the US has the largest economy in the world. And so it makes sense that on these high level announcements today, there will be a lot of focus globally from investors. And likely these numbers will move the markets, maybe not as much as the FOMC statement yesterday, but nonetheless, this data is ranked as high level of importance and could likely move the markets quite a bit. So we can look and see, well, what is the case been in the past? So what's nice about this economic calendar is we don't have to guess. We don't have to say, well, if this data comes in worse than expected, then I think the US dollar will weaken. Or if it comes in better than expected, I think the US dollar might strengthen against other currencies. You don't have to guess that. You can look and see, is that what happened in the past or not? So you use these tools over here, which is really the powerful part of this economic calendar, is you can data crunch in a matter of a few clicks and do what's called data-driven trading without having to guess what you think or what you feel. And so we can pick the currency pairings, and then we can pick the time frames after the past announcements. Each of these candles represents the time period chosen here after the last time the initial jobless claims data came in. So we can see it's a mix, up and down. But if we qualify this for the period of time we're interested, and we could go as little as 5 minutes or as much as 4 hours with this tool, I could say, well, what if it comes in above forecast, meaning the jobless claims numbers are worse than expected? And in this case, a higher number means worse than expected because we're talking about jobless claims, people not having jobs. And so the higher this number is, the more people will say, the US market is slowing down. Maybe interest rate decreases could come if that's the case. So if this comes in above forecast, we might see that the past data shows that the euro climbs against the USD because the USD would likely weaken with worse than expected jobless claims or higher than expected. So above forecast, and that's exactly what we see here, 80% of the time, the movement is up with the euro climbing against the USD in the 4 hours after this announcement, if the numbers come in higher than expected, above forecast, meaning worse than expected, meaning a slowdown in the jobs market in the US because jobless claims, if they come in higher than expected, that's bad news, which then might be viewed as good news by the stock market because we saw yesterday, larger slowdown than expected, stock market went up. So if there's a larger amount of jobless claims and the USD weakens again, we could again see the stock market react like yesterday, okay? And so there's no guarantee of that, but we do see on this currency pairing setup that the US dollar indeed has weakened 80% of the time in the past if this data comes in higher than expected on jobless claims. Yes. Sean, I think is your name. This calendar is available for everybody on the AvaTrade web trader platform and our app. Okay, it doesn't matter if you have MT4 account, MT5 account, it's there. Okay, so this is one of the benefits of trading with AvaTrade is you have these tools that many other brokers either don't offer, or if they do, you have to pay for them. Okay, as long as you have a live funded account, all of these tools are free and active on your account. Some demo accounts are unfunded accounts. Maybe the signals are limited after the first month or something like that, but the signals are free. Everything that I'm showing you is there for free for you to use, as long as you have a live funded account, okay? And I believe even on the demo accounts, most of these features are active, okay? Good question. Now, we can change the direction on this. What if this comes in below forecast, meaning better than expected, less jobless claims than expected? You see the opposite result. There's more red going down and less green going up. Now it's 50-50 in terms of 3 of them went up and 3 went down, but look at the size of the drops compared to the size of the rise. You could add these 3 that went up and they don't equal this 1 that went down. So the directionality was 50-50 on this, but you can see the majority of pip movement was down if this comes in below forecast, meaning better than expected news. And the opposite, if it's above forecast, almost all of the movement up. Okay, so it doesn't mean that every time that it comes in that way, that's the direction it will go. But you know, if you try this 10, 15 times over the course of the coming months, if you can win at the percent rates that they're showing here, that would be a heck of a return potentially. Okay, it's all about timing, entry point, and you can see that even in the first 5 minutes, there's some movement. But you see here only less than 10 pips range movement in the first 5 minutes after the numbers came in. So you have time to place your trade in that first 5 minutes without it even having gone average range of 10 pips. And then after 4 hours, we see the average range movement is over 32 pips. So it's not like you don't have time to see the numbers and then place a trade, but make sure you get the entry point that you like before you place it if you're planning to trade on this type of data. Okay, but you can have a trading plan all in place. You can put it together for each day of the week over the weekend. Look at which announcements show the strongest statistics for which direction on how this data might come in and be ready to trade. If it comes in this way, I trade on this. If it comes in that way, I trade the other way, etc. Okay, and that's what we could call, like I said, data-driven trading. Now, we can look at announcements for tomorrow as well. Okay. Bank of Japan rate decision. You have a lot of options to look at here. The balance of trade out of the euro area, this is a big one. I know it's labeled medium in terms of importance, but it still has good statistical movement a lot of times. So, you know, with the euro USD pairing, and again, we can switch to GBP, euro GBP, other pairings, okay? Anything against the euro in this case, because it's a euro announcement. And you can check different pairings to see which have moved better for you maybe. But you know, if we look at this, if it comes in above forecast, look at that. 80% of the time, look at the movement up. If the balance of trade is better than expected, it makes sense the euro strengthens. Okay? It's proven there in the data that statistically speaking, the majority of the movement's up if this comes in above forecast in the 4 hours after these announcements. Again, there is one that dropped. Not much, but it dropped. So it's not 100% of the time. But nothing in trading should be 100% of the time unless you really have inside information. But with this type of data, it can put you in a strong position to be able to make informed decisions after seeing the numbers come in. Okay? And what if this comes in below forecast? It's the opposite, right? Look at all the red movement down, how large these movements were, and the movement up, smaller, less often and smaller. Okay? It's not 80-20, it's 57-43, but you don't have to trade in both directions either. You could say, okay, if it comes in below forecast, I don't like the 57-43 percentage. It's not a big enough statistical advantage, maybe in your mind. But if it comes in above forecast, you might be ready to trade because the statistical advantage from the past is more clear. Okay, but this is what I say over the weekend, even when the market's close, you can go through the upcoming week's announcements and see which direction on which announcements you'd be more inclined to trade based on how the numbers come in, and write it down for each day. If it comes in above forecast on balance of trade, I'll buy on the EU, the Euro USD, but if it comes below forecast, maybe I won't trade. That sort of thing. And you get the pip range movement for where you'd put your take profit maybe as well. You could expect almost 36, 37 pips range movement. Okay? And after 4 hours, maybe then you'd think about closing your trade with this strategy, because that's what this data is based on, is no longer than 4 hours. You could do shorter time frames, 1 hour, 30 minutes, okay? But the data many times seems to be more clear after a longer period of time, like 4 hours, okay? All right, any questions? Any other questions besides the one that came up before I move on? And I'll keep an eye in case the questions pop up as I'm going along. I don't see anything coming up as of yet, so I'll move forward. We could go to the market buzz as well. So, and those tools are found right here. Point at this globe. So market buzz, another fundamental news tool, okay? Doesn't matter what it is. It could be trending small. Then it's one of these smaller circles. There's Disney, okay, Johnson & Johnson. The typical tech stocks seem to be trending the most, so they have the biggest circles. Apple, 1,074 mentions online that we've found. Tesla, NVIDIA, no surprise which ones are trending the most. They're in the news the most day in and day out over the past year, honestly, and especially NVIDIA. But NVIDIA, Apple, Microsoft, Tesla, those are common ones that you find a lot of fundamental news about. But there's some diamonds in the rough with some of these smaller ones as well. Okay, and some of these you might find are only on our MT5 account. So you could switch between MT4 and MT5 right up here. Okay, I can switch. Here's my MT4 account. Here's my MT5 account. So if you search for something that you find here and it's not in your MT4 account, well, add an MT5 account from your My Accounts section. That's over here. You click here, go to your My Accounts. You can then go to Accounts, and you can add different account types here. Add an account, real account. Then you pick your account type, and you can add whatever account type you want. MT4, MT5. It'll automatically be verified because your user account is already verified if you've verified it already. So don't need to upload new documents or something. Okay, so back to my MT4 account, which is my funded one. So once we've looked at the articles maybe in the market buzz and looked at the economic calendar for that style of trading, then we can start to look at the technicals as well. So in this market buzz, I don't have to just look at stocks. I could look at the indices. I can look at currency pairings, cryptos, if they're available in your region to trade on, commodities, etc. Okay, everything's here. So if I say, well, why is Apple trending the most today? And I'm interested, so I click on it. A few things I can see right away. There's a trend analysis. Remember I said you can combine the technical analysis with your fundamental analysis. So you might already be thinking, wow, it's a positive environment today because of the lower than expected CPI yesterday and the realization that the US is open to lowering interest rates still this year, and that's created a lot of optimism. And then you see the trend analysis is that the price may rise over 11%. So now the technical analysis also agrees that it's an uptrend and that it might not find resistance until it gets up to this price zone up here, around 22 or 225.60. Okay, so that's quite a ways from where it closed. So if it opens at a price you like and it doesn't break below what they call the pivot line here, then it's a valid buy signal still. So if it breaks below this line, then that establishes a downtrend, and they say they think it could drop towards these red lines then down here. As long as it's above the blue pivot line, it's still an active buy signal. So if the market opens, you like the price point, it's still above the blue line, and the fundamental news maybe that comes in still today. Remember, I showed you there's economic announcements coming out of the US today. If those also cause more positive momentum, then maybe you go with this signal on Apple or on whatever it is you're looking at in the market buzz. Now, specifically, the market buzz doesn't just give you the trend analysis for technical analysis, but you also can read articles, okay? Google says it will engage with Japan over a new app law. Also Apple and Google will engage with Japan over a new app law. So if you want to know what's going on with that, what law are they talking about regarding Apple and Google, click on the article, okay? You can read a synopsis, which I mean a little summary of the article right here, or you can click and read the entire article. Click the link, it loads the source of the article, and you can read the whole thing to see what's going on with that particular story. And then decide for yourself, do you trust the source? What does the information say? And maybe you read a few articles that talk a bit about Apple and even their competitors, and that helps you decide whether you trust this trend analysis or not. Okay, so this is where the fundamental news is found, with breaking news rather than scheduled economic announcements. And so you can combine both types to get a better overall picture in your mind of which way is the wind blowing globally with those large economic announcements, but also specifically more pointed with specific instruments with the market buzz articles, and then make a decision where you feel really confident about trusting or not the trend analysis that's here. And so this is where you move from using one tool to help you trade, like a signal by itself, and that's what this trend analysis is, it's a signal. Rather than trusting a signal by itself, you qualify which signals you'll trust based on, does the fundamental news from the economic calendar, from the market buzz, does it also support trading in that direction? Or is it just the technicals that looked good? And maybe the fundamental news tells you to do the opposite, right? If you find an article that says, you know, Apple's numbers are in big trouble that just came out, then that might make you say, you know what? I'm not going to follow this signal because something new came out that might go against that. Okay, so that's why it's important to check the fundamental news before you follow a signal. Even if you're into following technical signals, you might still want to check the fundamental news on the economic calendar in the market buzz before you choose whether you should or shouldn't follow a technical signal. Okay. Oki, I see your question. You're in Nigeria. How can you fund your account? You'd like to do an online transfer. Go to the deposit section, okay? And it will show you the deposit methods that are available, okay? So if I go to, here's the money symbol, okay? Click on deposit. It will bring up my deposit options for my region. What it shows for me here might be different than what you see, because different regions that we work with have different deposit options, okay? So once this loads, you see online payments, credit card, debit card, Google Pay, M-Pesa, Perfect Money, NetTeller, Astropay, a lot of options with online payments. And you also see the offline wire transfer options. And usually you'll see a couple different bank options. Just choose the right currency for your account because the account numbers are different. Most of the information stays the same when I switch, for example, from USD to Euro, but one of the account numbers changes. Okay, so make sure you pick the right currency for your area, and then you wire for offline wires, like from your online banking. If you're sending a wire, this is the information you would use. So, but I think you're asking about online payments, so that would be this section, and you'll see a number of options in your region that you should be able to choose from. Okay, very good question. Okay, so any questions regarding the market buzz feature or the economic calendar before we kind of move on from that? I'll pause for a moment. Okay, what we can do is go ahead and look at maybe a couple different instruments. And so maybe you're interested in, I don't know, the US 500 or the NASDAQ because of all the movement that it had yesterday. Maybe you anticipate something today similar with the announcements that are coming. And so we can take a look at the US Tech 100 and see if it has a signal, first of all. It does. These little symbols here, the squiggly line means there's a live signal on the instrument. And so if I click on that, the signal will load in the order window. No surprise to me, it's a buy signal and that it's uptrending. We see the pivot line down here. If it breaks below that pivot line, then the buy signal is off and they would say look for further downside. Currently, it's still an active buy signal. It's above the pivot line. And the take profit levels that are suggested are at 19,700 up to 19,840, which I believe would be another record all-time high, okay? Which just seems to be par for the course for the US 100. Now, if you choose to do this with a market move, you can do that. If you wanted to put a pending order, now obviously you have to only trade when the market's open. The US 100 trades most of the day. If you're trading an individual stock, then they're only open, like US stocks will only be open when the US market opens. But our indices trade on the futures, and so they run pretty much 24 hours a day, Monday through Friday, with tiny little breaks during server resets. So what we're looking at then is a live buy signal. You may or may not choose to do that, but it's there. We understand the fundamentals of why there would be a buy signal. Now, let's say you're already sold on potentially buying, but you want to see today's data first. So remember, the economic calendar shows there's, I think it was initial jobless claims coming out of the US today, and there's been a big focus on the jobs market. So if that comes in better than expected, you could see the USD strengthen, and this signal could go bad. If that data comes in like the data yesterday showing worse numbers than expected, higher numbers of people filing that they don't have jobs anymore, then maybe we get a similar reaction, and this signal comes to the take profit levels, to all-time highs again. So it's a little bit tricky with the signal because the data hasn't come in yet today. So if you want to try and anticipate what will the data be and you think it'll be worse than expected, well, then you could go right ahead and buy on this if that's what you think makes sense. But you have to understand, we don't know for sure what that data will be. So you have to consider the fundamental news. Maybe you wait for that fundamental news to come in. If it comes in a way that you think would cause the signal to go good, but maybe temporarily with the volatility of an announcement, sometimes you get a false move in the opposite direction before it goes the right direction. So maybe you're just waiting to see if you can get a better entry point after seeing that data with a spike down in this example before buying. And if that's the case, then you could put a pending order, or you could just wait and watch the announcement and then see if the numbers come in, let's say, worse than expected, and then you expect that the USD would weaken and US Tech 100 might go up. Maybe you're waiting for a spike down. And if you get the price that you want, then you take your move. But at least going into it, the signal is helping you know where's the support level down below. Where would if it dropped too low, would I have to assume it's a real downtrend and maybe give up on the buy signal? And using the economic calendar, you can get an idea of, how did that data come in and which direction would I expect the USD strength to go? And usually if the euro is climbing against the USD, so too many times are the stocks and the major indices. So there might be a wait and see here to see if you can get a better price and see what that data is later today, and then you act maybe on this signal. Okay, it's not always a right now type of thing. If indeed you wanted to go ahead and, let's say, follow the signal and buy now, okay, and some traders like to do that, you might have a gut feeling that that data is going to come in worse than expected, like most of the recent data has been out of the US. The non-farm payroll was worse than expected last week. The CPI data yesterday was worse than expected. Maybe you think that trend will continue and you want to preemptively make your trade. That's okay as well. You can risk manage that trade. So if I'm entering right now in a market move and I want my take profit at, I don't know, 19,800, somewhere in the middle of that suggested take profit zone from that signal, I can see my potential profits over 9,000. Hey, that sounds good. But I also can see I'm risking to my stop loss, and I can adjust my stop loss to where I think it makes sense. But let's say I leave it here, 19,430. Maybe that's below the pivot line from the signal. Then I can see, wow, I'm risking over 8,000. Okay, so I need to adjust my trade size then. So if I say 0.1, now I know I'm risking 1780 to make 1920. All right, and I can go back and look at that signal and see where exactly is that pivot line. It's at 19,430. Okay, so that's pretty much where that stop loss was pre-programmed. Okay, stop loss 19,430. Take profit 19,800. Okay, and so we're looking at almost equal risk, a little better potential profit than risk. And so as you start to do this, you might realize I don't like this entry point because I have to take such a small trade to get my risk. I'm still over 1% risk on my balance, so I'm lowering my trade size and it keeps calculating for me how much I'm risking. I need to get all the way down to 0.03 in order to be risking under 1% of my balance. 1% would be about 634. And with 0.03, now I'm just below 1% risk. Maybe I want a larger potential profit. So I might start to say, you know what? I think it might pull back before it rises. So I'm gonna do a pending order, execute when price hits. If it drops down closer to that pivot level of 19,430, let's say to 19,650 even, okay? And now I say take profit 19,800. And this could be 19,500, and I start to try and find an entry point where I would be more comfortable with the potential profit and the possible loss. Okay, so maybe I decide 19,550 is the entry I like. Okay, that's 100 above that pivot. Okay, where the stop loss was at 450. And now you see how easy it is for me to have risk managed my trade. And I realize I'm not interested in a market move right now because I don't like the entry. Maybe I'm set on the directionality, but I'm hoping to get a pullback and get in just above the pivot level, down, that being down around 19,450. And maybe I want to get in around 19,550 as my execute price. And then I can get my stop loss down below the pivot and only risk 300 while being able to go after 750. Now I can take a larger trade and still only be risking 1% of my balance. So now I can go 0.7 maybe, and I'm risking 0.07. And now I'm risking just over 1% with more than double the trade size, 0.6, double the trade size, and I'm risking just under 1% still, but my potential profit is 1,500, almost 3 times the risk now. So a pending order, when I look at the risk management and potential profit on this, maybe makes more sense to me than a market move because of the entry point right now. And maybe after the announcement, this pulls to where I want it, and I'll have the hindsight of being able to see, was the announcement better than expected or worse? If it was worse than expected, I leave the pending order on maybe. And if it was better than expected, maybe I cancel my pending order because I would expect the USD maybe to pull the US Tech 100 down, okay, based on recent trends of how that data is interpreted by investors. So you can calculate risk reward in here very simply and avoid taking a trade like that initial setup was that's risking more maybe than what you want, okay, and not going after the potential profit you prefer. So I prefer this setup and would be happy to catch that entry point, assuming that data comes in maybe lower than expected today out of the US for initial jobless claims, and perhaps you catch the price point that you like, okay? That's just an example. I'm not saying that's how you have to carry out this trade strategy on the NASDAQ today, the US Tech 100, but it's an example of how you can use these tools, including the risk management tools in the order window, to really set up your strategy before even these announcements come, okay? All right, any last questions, comments before we end things today? And for anybody who wants to rewatch this, or if you have someone else that wants to see the session and you tell them, hey, I learned a couple things, you should have been there, it's recorded. It'll be on our YouTube channel by tomorrow. And so you can always go yourself and others to watch these sessions on our YouTube channel, as well as other presenters who do webinars through the week that also can be very helpful for you in terms of gaining market information and trading strategy ideas, etc. All right, everybody, thank you for joining. I don't see any further questions popping up, so we'll end things here. Good luck with your trading today and the rest of the week. Bye for now.